Hello, investor. Welcome to the first Trading Live with Morpheus. Questions are open. Comments are open. Leave a comment after the video is posted if you didn't get a chance to catch me today. I will answer all of your questions. I will answer all of the comments. Personally, right now, since there's nobody here yet, we're still going to be waiting maybe for somebody to join up while I get things ready to take advantage of the NFP. The NFP, it stands for Non-Farm Employment Change. Let's take a look. Basically, if we go to any kind of Forex calendar, I like to use Forex Factory, but there is also, for example, investing.com. So right now, I think I'm doing this only for myself, but if you kind of go here, what we're able to do is find in the earnings calendar. This is something that the stocks, the companies that are publicly traded, something that you can become part owner of the company. You are able to look at quarterly statistics and earnings calendar, but we're looking for economic calendar. The beautiful thing about investing.com is that here you are able to select the language of choice. So if you're in, obviously in India, you can actually choose. I do believe that they do this in Hindi, if I'm not mistaken, but I think I am mistaken. Look at that. It's just English, a whole bunch of different variants, some Asian languages, but nevertheless, if you're able to select maybe your own language, and this is what we need to keep in mind. That economic calendar needs to be selecting the right time period, right? Right now, I am in Cyprus, and basically it's GMT plus 3 time, so we can take a look, you see, maybe pick your own, but it doesn't matter as long as it's GMT plus 3. We understand that in 15 minutes, right? In 15 minutes, or in 12 minutes, really, less than that, yeah, we're going to have for Canada, a bunch of statistics, but we also have for United States. So here we go. Unemployment rate and non-farm payroll. There we go. So the forecast is 137,000, which means that it's a little bit less than previous month. And if the actual comes in less than 137, it's going to be bad for the dollar and it's going to take a hit. So we are going to do something different today. We're going to take a look at pending trades and the retracement. So let me clarify. Retracement right now in, as I mentioned, about 10 minutes, a little bit over 10 minutes, we're going to have an impulse. A euro dollar is going to present us with a big candle up or a big candle down. This is something that is pretty much guaranteed. All right. Very rare is there not going to be an impact on the real market with the NFP, which is the most popular macro statistic of the month. So after this, so what does it mean that when there's going to be an impulse? What does it mean? It means that a lot of people have chosen in the real market to open buy or sell positions, right? But when they open this, they're technically buying a position, even if it's even if it's for a red candle, even if it's for a put or for a sell, you're still buying opening a position. You're still investing money, which means that you're affecting the supply and demand principles, right? So the idea is that you are impacting the market by buying and selling. Now, we on this end, in the binary options, the graph is going to reflect this. But what we need to understand in Forex, there is no expiration. You can close the position as soon as you open it, right? Or you can keep it open for a couple of days. It's all your choice to set an expiration or just to allow the asset to run freely into one direction for a period of time. Having said that, when you close the position, you're actually doing a sell, and again affecting the supply and demand principles. And what ends up happening is that there will be a retracement. So retracement, in other words, is people taking out their money. All right, so you buy a position, it opens, an impulse. You're creating the buy or maybe or selling impulse, but after you make in forex your particular 2, 3, 4, 500% profit, you will close that position, and that will be a retracement. What makes Pocket Option a fantastic company is that it has crazy amount of flexibility in the instruments that are available to you. One of these things is pending trades. So what we will do is we will go to pending trades, we will go to buy the asset price, and we see right now, there it is, it's the changing number. This is the current asset quotes, it's the price of the quotes, right there. So what we will do, we need to understand what is a pip. All right, so, or point in this case. So pips is the fourth digit after the decimal. Right, so we got 10, 69, 9, or now it's 68. 68 is the pip. When it changes from, let's say 7 to 8, or I'm sorry, from like 2 to like 3, it actually means that there's a, 1 pip plus movement. So what we will do though is we will, just to kind of give you an idea, we will create a pending order a couple of seconds before the impulse for higher and lower position, right? So with $1 trade right now, I'll show you. All right, so the price right now is 10.68. We're going to set it at 10.65, and we're going to open a sell position, and we're going to say at 10.69, for example, we're going to open the buy position. So right now we have this ability, if the asset reaches a particular, right, it was here when I opened it, and it said that as soon as it reaches this level, it's going to open the position for, well, in our case, only for $1 and for 1 minute. It cannot be less than 1 minute. Right? So if it goes up, continues, all you got to do is just close the position that is not active. And essentially what's going to happen is, well, you should end up making money, right? Irrelevant of which direction it will go. So if it shoots into a downward position, it activates that particular position based on your settings, and it's, if it continues to go up and closes, or continues to go down and closes below, you're making money. And all you have to do is just close an inactive position, which, doesn't really cost you anything. So there we go. In about 6 seconds, right? There we go. I should be in the money on this trade. Then there's also should be, as I mentioned, a retracement. So what we will do is we will open a pending trade, buy the asset, and we're going to do a several points up, several points down. We're probably going to do it something nice and easy because later I'll explain to you exactly the possibilities that are involved in this not going kind of your way 100%. There's never really 100% guarantee. Statistically speaking, we do have a high probability to see a spike and a retracement in the same minute. But if the statistics are super good or super bad, sometimes the retracement could carry over into the following minute or the one after. So it doesn't make any sense to like open, every 5 pips, open a position for retracement, 10 positions with multiplier 2. That would be just crazy. But while I see we have one viewer, yeah, Gary, hello, Gary. There we go. We got our people in here. Let's see if we can dazzle you today. All right, so we got less than 5 minutes, right? Right now, if we click on any Forex calendar, we should see a countdown. There it is. So in 4 minutes and 30 seconds from now, there should be a retracement. So while we're waiting for this, I guess we're gonna be going over this over and over again. Next week there's going to be CPI on Thursday, right? This is going to be the next stream for anybody who wants to kind of join me live, get some answers to any of your questions based on the topic at hand, of course. But I'm very eager to see, all of you here again, where I get to prove to you that market is not chaos, that you're quite capable of trading into profit without relying on luck. Now, all right. So obviously, a subscription to the channel, leaving a comment is something that would help me out to understand what kind of streams, what kind of topics to cover, what kind of ideas to share with you, what things to clarify. So do not hesitate. Please help me understand what you guys need, what you guys want. If you sign up to Pocket Option through the link below, you can count on massive cash back. It's something that, once again, I can explain to you on an individual basis. So get in there and let's, kind of start making money together. All right, 3 minutes from now, as I mentioned, now here's the interesting thing: the forex community, right? Forex is any time you see essentially currency pairs. That's forex. Forex stands for foreign exchange, right? Forex. And you can get paid differently with different instruments, Forex instruments like binary options or Forex itself. So when we see that at the same time Canada and the United States are going to be releasing the statistic at the same time, the best currency pair in this situation for Forex traders, for fractional Forex, not binary traders, will be USD CAD, but only in a situation if one of the news is bad while the other one is good. So it's kind of like catapult. One side is pushing down while the other one is pushing up. That's where the movement will be the biggest. But if both of them are good or both of them are bad, they're going to be canceling each other out a little bit. In this case, the United States is going to hold a little bit more weight because it's the biggest economy in the world, but it's not going to be the biggest move if there's wonderful statistic for Canada and equally wonderful statistic for United States. So picking the right currency pair is also kind of crucial in this idea. So keep that in mind, that if there's two countries that are releasing statistics at the same time, for binary options, it's not quite as important because as long as there's like one pipette in your favor, higher or lower, you're going to get the winning trade. But in Forex, the size of the movement is the one that determines, the kind of profitability you're looking at. All right, so there we go. Let's hop into the real market. We understand that there's 10 more seconds. There we go, 8, 7, 6 until the last candle prior to release. Because right now it's going to be, there we go, it's 15:29. There should be already a little bit of volatility, and that's why we're setting this a little bit differently, right? So we're going to wait another 40 seconds or so, and we're going to open our pending trades. Here, I'm loading $10 for the first, got 210. Let's go back. Loading $10 for a retracement. Loading $10 for pending trade. And, well, we could see some volatility here that would actually interfere a little bit with our pending trades. But let's take a look. So right now we got 1083. So all right, let's go with 1080. All right, 78. Let's go 1080 for a buy, and let's go for 1075 for a sell. Oh, there. Okay, there we go. There we go. There's the impulse. Let's open one for a retracement. it didn't open mine for retracement. But we did see that essentially what I was trying to do, we tried to open the position for a retracement. Alright, so there is, wow, there's actually interesting kind of maybe a tug and pull statistic. It's still pending right now. It's still pending. Take a, hop back in. There was that impulse. It closed both of the trades, impending trades, exactly what I wanted to actually try to see if we could avoid this time. But apparently statistic is not as fabulous. And that's why it actually, yeah, spiked. Wow, it actually closed both positions in the negative. Wow. All right, let's take a look. Once again, what kind of statistic? It's still pending. Well, let's do it. Let's maybe refresh the page. We see unemployment rate. There we go. Nope, non-farm. Non-farm is positive. That means it was negative news for the euro. And that's why we see a spike. There was negative news for the euro, a retracement. That would actually sell. You would think that that's why I didn't open. The position was, the expiration was different. Alright, kind of messed up a little bit. Alright, so spike, retracement, there should be a continuation because the news is actually fairly decent. They got adjusted, but it was like 150 the previous month. It was adjusted with the updated statistic to 117. They were predicting a higher, and it came out much higher. So what we're able to expect out of this is a spike, retracement, and a continuation. There was a little bit of a snafu. I think I would have made money when I opened the retracement position here, but with the previous communication with one of my clients, I forgot to switch this from the timer, where I set the time manually of the expiration, to the timer where it just counts down the seconds. So anyways, I didn't get a chance to make money on the retracement itself. Because the statistic is good, there was a spike, there was an unusual retracement, and as you can see, there is a continuation. But at this point, that's it. The position is, this particular event has run its course. It has nothing more to give now. After this is completed in a couple of minutes, maybe in another 2, 3, then you have to look at technical or other fundamental analysis to make your decision in trading in real market. Going to euro dollar, right, to the OTC, as you can see, there was no impulse right here because this is the market, the OTC, that's being pushed up and down by our clients, by pocket option clients themselves. All right, so you are the one that are selling here, pushing the asset down. You are the guys that are buying here, pushing the asset up. You're looking maybe at these support and resistance levels and making certain decisions. While here, we have hundreds of millions of people opening positions, and I think that at this point, this particular event has run its course. All right. So, my dear friends, once again, just to give you a heads up, next week, right, this is where we kind of take a look. Next week, the second most popular statistic is going to be on Thursday, same time, CPI, Consumer Price Index. Tune in. Let's take advantage of this together. Let's see if you guys got any questions, any comments, any concerns. My name is Morpheus, and I'll see you guys next time.